Hey traders. So some things I'm looking at here. So I went out on a weekly time frame to draw this trend line on my chart. It's based off the bodies of the candles in the weekly, and I just find it quite interesting how we're back testing that trend line. Came down pretty hard today, right into that trend line. So tomorrow it's going to be a big tell on the markets. If we happen to gap down tomorrow, it could get ugly quick. You see how we rejected really hard, and we could have a very quick move to finish the week down into the 542 area, possibly. That's our hard test, 542. If you look at your market maker moves for the week, that would put us slightly outside the expected move if we were to come down to that 542 back test. So be mindful of that. Right now, we're still above the 20 SMA, or the 9 SMA. That's 9. Sorry, still above the 9 SMA. So still fairly bullish on the overall trend, but we are doing a major back test. Managed to do that with a pretty hard candle in today's session. So something definitely to keep an eye on. Okay. So ultimately, I do want to point out here, I am in the camp that into September here that we are going to fill these gaps. These gaps will be filled going into the final before the Fed cuts interest rates. So that is my primary thesis, that we may have hit a double top on the S&P's technical double top. You see how we're basically both. This could be technically considered a double top scenario here for SPY. So let's definitely keep this on watch as a possible double top scenario here on the S&Ps. Now, if you put the ESs, it's actually showing as a lower high. Okay, so a possible lower high scenario using your futures contracts. So, we've got a little bit of divergence there going on. Okay. Another technical thing I wanted to point out here was on the Qs. So the Qs, we have a negative divergence versus the SPY. We're showing less relative strength in price action than we did relative to SPY. SPY was in a double top scenario, where the Qs are not in that double top scenario. Okay, showing some relative weakness already into critical support on day one of a correction. So be mindful of that. Suggesting that this area right here could be a blow off top area, and we just, we didn't get any bids into the close because they were really worried about the where we're currently at. The markets were very worried. So, like I said, these gaps look to be filled faster to me than what they are on the S&P. So, definitely keep this on watch if that's the case. I did notice something here on the NQs. You see how the candles, you're actually tagging the candles right here on the software. Okay, on the weekly. If you go over to the daily time frame, now look what happens. The same trend line is not even touching the candles. So I don't know if that's a technical problem with the software. I don't see this very often, so I definitely was wanting to point that out. So, thinking that we're already into that candle is something you might want to be careful about. So what I do is typically I go back over to the Qs and draw that line, same line, which we got right there. Okay, and so there you go. We're right into that critical support right there. Okay, and this is our primary trend. Losing that, and we're into a bigger correction if we were to lose that. So we're getting kind of a similar look versus the NQs. These NQs are away from that still. That's kind of what the other thing is showing as well. Okay, so heads up on that. Like I said, we do have a negative divergence on the Qs versus the SPY. So it's something definitely, something we have to be concerned about. And also, remember, NVIDIA earnings are coming up. And so we're just looking 28th. So next week, NVIDIA earnings are coming out. So for whatever reason, if they decide to take profits on earnings from NVIDIA, look out, people. Look out, I am telling you. And another development today was the two of the biggest uh, railroad companies in North America are on strike. They were locked out. It wasn't just strike; they were locked out by the companies. So that's a very evolving, very bad situation potentially for the economy, something like that. So uh, here we are at all-time highs in the markets. The markets seem to think there was nothing that could stop it. Then all of a sudden you have something like this, which that's the one of the backbones of the entire economy. Okay, I will make the argument right here, right now. We're doing a back test on IWM, which could be make or break right here on IWM. Potential make or break right here on IWM. So heads up on that. Um, so we'll see what happens there. It hasn't actually broke down yet, but I would say if we were to lose the August 20th low, that's setting the stage for lower. We start. I actually have a alert there to go short if that were to trigger. So definitely keep this one on watch in your trading. So heads up on that. And then if you, I don't need to show it ready, but this is really important for that one. Okay, the diamonds are giving us a doji right here, right now for the week. So be mindful of that. Indecisive. Okay, so we had a down day today. We closed at an indecisive area. And this trend line right here as our primary support, so let's definitely keep that in watch. We did fill a gap in today's session. So it was the one of the one that did still have a gap right below us that got that was able to get filled. So definitely keep that on watch. In my opinion, there's a lot of risk trying to trade the upside. Just be mindful of that. And then on another note, 1 second here, guys. One important tool you guys may want to add to your arsenal is the 2-hour time frame. Okay, and a 2-hour with the 20 SMA. Let me see if I can find the 20 SMA real quick. 1 second here. Study, 20 SMA. There you go. And so basically, if you're below the 20 SMA on the 2-hour, then this, you want to try to do the short side. So as soon as that broke this afternoon, so I don't know what time that was. Let me go over here and look. So yeah, see guys, we broke that 20 on the diamonds at 9. Go here. I can't. It's a 2-hour candle. So early this morning, we broke that 20 SMA. Okay, and it doesn't look like we had the first 2 hours up to 11 o'clock. We tried to do some back and fill above the 20, but after 11 o'clock, that was it, man. They couldn't get back above it. So really, from 11 o'clock on, if you'd have went short, that was a setup to be short for the afternoon on the diamonds. And if you look at SPY, zoom into it real quick, probably a similar chart. You broke on the 11 o'clock candle on the 2-hour chart. Did we get much back and fill? Let me check real quick. So 11 o'clock. So we broke right around 11 o'clock. So we broke right here. Okay. So basically, if you'd have went short here, you would have never, even on the swing up, you would have never been taken out of the trade. Okay. So what a lot of times they'll do, they will try to cause max pain. So basically, they come down and they come all the way back up just to where it starts taking the stops out because people want to make a little bit of profit. It'll capture those stops. Okay. But if you're willing to keep your stop to break even or even a little bit less from the entry point and willing to ride it for an hour or two, a lot of times you can catch the whole move to the downside. So always have to be careful on this little cat right here because they really want to blow up the shorts. Do their best. Try to get them to panic out. And that's exactly what they did today here on Spy. Okay, that's just a quick rundown. Like I said, my main thesis is that we're going to go lower, and we'll see what happens. And like I said, I'm really looking for us to revisit the August 5th lows here in September. So heads up on that. So if you liked the video, please like it and leave some comments below. And I am working a lot, so it's hard for me to day trade anymore. But like I said, really use that 2 hour. It really helps on your trading. If you can, the 2 hour and the 20 SMA, just those two little indicators, time frame and one indicator. Keep it as simple as you can, and it can really save you a lot of trouble. Okay, thanks a lot.